Hey everyone, Meet Kevin here. Welcome back to another episode of the Meet Kevin Show. Today we have Genevieve Roch-Decter with us, and she is a CFA. She's got some incredible insights on crypto, and especially now with the disaster happening in Ukraine, this could end up being, as she says, a watershed moment for crypto. So we've got about 15 minutes here, and I want to get as much information as I can. Thank you so much for being here. Hopefully I didn't mess up your last name. Thank you so much, and the link to her newsletter is linked down below for Grit Capital. Welcome aboard.
Amazing to be here, and you did a great job on my name.
Yay! All right, so watershed moment. What does this mean for retail investors? Is now the time to really start getting serious about considering getting into either the main coins, Bitcoin, Ethereum, and the alts? Is it still early? Why is this such a watershed moment? What's happening? What are you seeing out there?
Okay, I like to use this quote to explain where we're at with Bitcoin and crypto in general. It's one of my favorite philosophers, German philosophers, Arthur Schopenhauer, and he says that all truths pass through three stages. So first, it is ridiculed. Secondly, it is violently opposed. And third, it's accepted as self-evident. So with crypto and Bitcoin in general, I think we're somewhere between phase 2 and phase 3. And with what's going on in Russia and Ukraine right now, you've got a situation where a massive country has just been disconnected financially from the world, and its citizens are seeing their savings, whether it's cash in the bank or stock holdings, pretty much evaporate. And, I was looking at the holdings in Russia of crypto, and there's something like 12% of all crypto holdings are held by Russians. So they have been holding crypto ahead of this, but we've seen the crypto markets rally. Last week, when Russia invaded Ukraine, crypto started to, well, initially it went down and then it started to go up, and it's actually up 11% since then. It was actually the third best performing asset in February. Volatility was number one, energy was number two, and crypto was number three.
Wow.
Yeah.
So is this potentially then, I mean, is it too late then? Or and how do you go about allocating this into a traditional portfolio? Is this something where do you have to be a maximalist, be all in, or what do you usually recommend?
No, 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 no. So I'm originally from the world of stocks. So I was a portfolio manager for the better part of 10 years. So I was a manager of small caps and private equity. So I lived in the speculative world, but still traditional world. What I recommend to people, this is how I've made money over my career, is use the 80-20 rule. So 80% of your capital should be in sleep at night things. I know you're big into real estate, Kevin. So
Yeah.
stuff you can touch, stuff you live in, your house, real estate, or stocks in large cap stocks. And then the other 20%, this is where you want to do your high risk stuff, where you can actually lose all your money. So you've got to be prepared, right? So it's
Yeah.
not for everybody. But if you're going to play crypto, it's got to be 20% or less. This is still an extremely volatile asset. And especially, there's 17,000 crypto coins out there. And I think probably most of them, maybe only a few dozen, will survive over time. No different than the .com bust when most companies went broke, because most of them aren't even real. They're just, excuses for hype. So I would say to anybody out there, less than 20% of your portfolio in anything risky like crypto.
Now, this morning, Federal Reserve Chairperson Jerome Powell kind of punted on CBDCs that they've put out, for commentary, that they're waiting for Congress. And it sounds honestly like it's going to take years before the American government actually does anything along with the Fed when it comes to crypto. Does that matter? I mean, I know we need regulation. I just heard the SEC is going after NFT creators for potentially violating securities rules. How much are we in the Wild West? And does that just create opportunities for us, or is this something to be fearful of?
I mean, there's always going to be fear in the marketplace. I think regulation is a good thing. I think when you get clarity, you get bigger market participants. So you get, pension funds, institutions allocating capital when you get clarity. And unfortunately, the SEC hasn't been very clear with companies. I don't know if you remember Coinbase, when they were going public, they were going to launch a loan product. And the SEC came out and said that, unfortunately, we think this is a security, but we're not really going to tell you much or what to do. And so Coinbase was like, okay, damn it, like, we want to go public, so we're going to just pull this loan product. So they pulled it. But then a couple of weeks ago, we did get some clarity, because another crypto exchange that had a loan product similar to the one Coinbase was trying to launch in the marketplace actually settled $100 million settlement with the SEC and a whole bunch of
BlockFi.
states. Yeah, BlockFi. Sorry, I missed the name. And so I think that gave a lot of the crypto community some clarity on what's allowed and what's not allowed. So we are, like I said, in that phase of like the violently opposed. You know, there is still opposition.
Now, what do you think the responsibility of the centralized exchanges is, having, you know, considering, let's say, Russia, for example? Some crypto exchanges are saying, hey, we're not letting people in Russia use them to sort of escape the sanctions potentially. Whereas you have Binance saying, come to us, we'll take everyone, even if you are Russian. You know, they're almost trying to be sort of the DeFi of CeFi. What's your take on that? I mean, what responsibility does CeFi have here, if any?
Well, if, you know, certain citizens have been sanctioned internationally and they're on, you know, an Interpol list or whatnot, and they're a no-fly zone in terms of traditional finance or crypto exchanges, then those individuals should not be allowed. They would, you know, exchanges need to KYC the accounts, you know your client, know where the money's coming from. And so I just think that those specific people should not be able to open accounts. But to ban entire, you know, countries and citizens, that is, you know, completely opposes the whole reason why crypto exists in the first place. So I would not be favoring that at all in any shape or form.
That makes sense. And I mean, the more regulation we get, it seems like the more we also start pushing over to DeFi. But then we also see a lot of risk in DeFi. Well, how do you fit the DeFi into that 20% risk allocation? You know, there are some DeFi protocols where people are looking at these 40 to 50% APYs, sometimes more, sometimes less. And it's just like, it's mind blowing. I mean, hey, if you're uncertain about stocks, throw your money into some of these things yielding 20, 30, 40%. But it all comes with risk. So how do you balance that?
Yeah, the DeFi is definitely the wild, wild west. I think that area is going to see massive amounts of regulation. I would say that anybody entering it and thinking that they're getting these, you know, risk-free returns, they don't exist. And I think the other bigger problem is just like how much exposure there is in these markets and how much leverage there is in these markets, because, you know, leverage limits are not regulated there. And so we have like no idea. It kind of, in a way, it reminds me a little bit of like the CDSs back during the housing crisis, and like all these, you know, these tranches of mortgage-backed securities that had,
Doesn't sound
you
good.
know, no, I mean, I'm overblowing it a little bit, but I think the point is just like where you don't know the exposure and you don't know, you know, the counterparty exposure and who's exposed to what, and, you know, where you get these situations where all ratios go to one, which is quite scary. You know, I think the crypto market's too small at this point to really be a massive threat like that. I think it's like 1.4 trillion at this point. So it's still not, you know, it's 1.4% of the US stock market in equivalent size. So it's not massive, but I think this is somewhere where, you know, we need to start tracking this stuff, because it could down the road, you know, be a big problem.
So maybe not so much of a greater financial crisis level problem like the housing market and mortgage market was, where 10 trillion was, like you said, through default swaps turned into 100 trillion. This is still kind of small. But how about risk wise for like stable coins? Because you brought up that counterparty risk and the leverage. You know, I go into, let's say, USDC and they're like, oh yeah, it's FDIC backed up per dollar. Sure, until you lend it out, and then it's lent out 30, 40, 50 times. And what if they default and the next person defaults in sort of a larger crisis? Your stable coin, which is sort of sold to people as a high yield savings account, could essentially be worth zero. How much of a real risk is that?
Yeah, that's a real risk. It also sounds a lot like some of these, you know, clearinghouses in the US that say they, you know, have stock on hand, but they don't, because they've lent it out and they've lent it out and they've lent it out. And next thing you know, you get a massive gamma short squeeze called GameStop. So yeah, it's an issue. I also think there's like the FDIC limits. I'm not an expert by any means on these, but they cover, you know, crypto that's in hot wallets, like, you know, on the exchanges. Stuff that's taken off might not be covered. I don't know how all that works. So yeah, there's there's definitely risk, and, you know, you've seen it before. Not your keys, not your coin, right? There's also those risks where these exchanges are still getting hacked, and, you know, there's still a lot of, you know, cowboy-like behaviors going on. So be careful. I actually, sorry, I was going to interject there. I actually lost money on an exchange at one point, and it forced me actually to go all, really risk free. But I bought my Bitcoin and my Ethereum through an ETF that I hold in Canada now,
Wow.
which is a little bit less risky than holding it through an exchange.
Which they won't approve here in the United States because they're stupid.
Not yet. Yeah, not yet.
Yeah. So what about politics? So how does politics play into our crypto investments? We've got a midterm cycle coming up in the United States. What do you see maybe in Canada? What do you research about the United States in terms of Democrat, Republican, or are they all just as clueless about it? Who's better? Who's worse?
Oh, I don't want to get into those kinds of politics. I grew up in a political household, and I listened to my parents fight over these issues for a long, not crypto, but just,
Sure.
politics in general. And I vowed to myself, I'm like, you know what? I'm going to get into finance, because
Yeah,
when you get into finance, you always know who's right, because the stock market will tell you, are you up or
that's true.
down?
So not necessarily like Democrats get in, go for the marijuana stocks and solar. Is there that kind of division? Like, oh, Republicans, get into, military stocks or whatever, like in crypto. Have you noticed anything like that?
I haven't actually noticed that. But again, I'm up in Canada, and
Yeah,
we're kind of fair weather when it comes to politics up here.
sure.
Everybody pretty much falls down the middle,
Makes
except for a
sense.
handful. So yeah, no, I couldn't comment on that.
Okay, no worries. What about the mining companies? So you've got Hut 8 Mining, great company. I've had them on the channel 2 or 3 times now. What do you think about the miners, and how much of an allocation would you give to them? One of the big concerns that I'd love for you to talk about that I have is, you might have a company that has essentially 20% of their market cap in actual Bitcoin, and then the other 80% is really just the potential of them mining. Like, there's no underlying asset there, right? So you're paying this premium because they're mining and the potential of future revenue. How much is too much? Like, when do you stop paying for that future cash flow, basically?
Yeah, so in Canada, so Hut 8's a Canadian company. We were the first ones in Canada to actually list a lot of these crypto miners. There was like this huge boom, like back in, I would say 2017, 2018, and everyone was like, oh my God, we got to own these miners, because we want the exposure to Bitcoin and Ethereum. And, kind of as to your point, like, they mine these coins, they have them on their balance sheet. There's like great upside if things happen. And then people realize, wait a second, these are just like a bunch of equipment, like with expensive, in some cases, expensive electricity, in some cases not, in some
Right.
cases, geothermal, and energy efficient. But it kind of like lost its luster, because it was easy to understand what these companies do, right? It's like,
Yeah.
they make money during certain parts of the cycle, no different than oil and gas drillers. When the price is high, they make money. When the price is low, they don't. And so these things are very cyclical. Not cyclical. These things are very volatile. And so for me, I don't hold them, because I don't find them interesting in any sort of way. There's not really any moat except for first mover advantage and capital.
Yeah.
So I don't hold them. I'm more interested in digging down into the altcoin space. And this is why on Monday, our firm Grid Capital launched a crypto newsletter. I wanted to wait for the market to pull back. So, it's down 40% from its all-time highs, but it's still up 3x over the last 18 months. But it's down 40%. And I've seen this happen before in 2017 when the market pulled back, and it was a fantastic opportunity to get in, although it sucked for about 18 months. But for an investor, this is when you want to go hunting. So I'm going hunting for altcoins, and I am going to put my portfolio manager hat on and really analyze these projects and make some bets on, what I think could be 10x opportunities. And, like I said before, or they could go to zero. Don't want to sugarcoat it.
How deep do you go down the coin market cap list? Are you top 20 alts? Or are you going, 20 to 200? Are you going 200 plus? Like, where are you hunting? What's your criteria, and any particular ones you want to mention?
So I'm going to do the top 20 for sure. I'm going
Okay.
to really get in there and really understand them. But then the next thing that I'm going to do is I'm going to lean heavily on my crypto contacts. So like I mentioned, back in 2017, I got into the crypto space. Our firm held the biggest institutional crypto roadshow in Canada. We were the first to really put this theme on the map. And so I created a lot of contacts in the space. We also hosted a huge conference, the first security coin conference in the world, actually, down in Bahamas. And so then I got into more like international connections. So I'm going to be leaning on my community to really help me decipher what's good, what's bad, what's junk. So I've got some learning to do, because I don't have all the answers, and I've really just been in Bitcoin and Ethereum and one other altcoin for the last little while.
Can you tell us
So
which one that is?
Yeah, I actually wrote about it on Monday. It's called SX Coin, and you can check it out on CoinMarketCap. It's about 400 million. They are market cap. They are the biggest now betting blockchain platform in the world, and their volumes have been going up, 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 up. And this was an accidental investment. So back in 2017, I made a lot of investments in private companies. Pretty much a lot of them went to zero. Some of them went public, were miners, like we were talking about before. And then this one in particular survived, and they pivoted a couple times, but then they created this platform, and it's really taken off. So I would encourage everybody to read the article we put out on Monday. It's on our Substack. We've got the #1 free finance newsletter on Substack for finance. So check it out.
Yeah, check that out. I've got that linked down below right here. Any final thoughts? We're out of time. Any final thoughts? Any remaining catalysts? Anything else you want to mention? And again, check out your newsletter, which you can sign up for free, and check out and preview right here in the description.
Yeah, no, thanks for having me on. Follow me on Twitter at Roch-Decter as well. I like to get funny on there because finance, nobody said it had to be serious, right? Let's learn and have fun and laugh.
Yeah, you had a great one about the, what was it? The most expensive, take me to an expensive dinner, and it was in the parking lot of a gas station.
Well, I actually have a date tonight, so maybe that's where I'm going to be taken to. So.
There you go. Well, thank you so much. Stand by for 1 second. I'm going to end the live stream. Folks, if you found this helpful, consider sharing the video. Thanks so much for being here, and we'll see you in the next one. Bye.